Hello everyone, today's video is all about tax rises, trying to predict what tax rises are likely to occur next year to pay for all the treasury spending during the coronavirus pandemic. The government spent 300 billion and that needs to be paid for. So which taxes will increase? You remember when Boris was re-elected last year, there was the pledge that he will not increase income tax, VAT, or national insurance. So assuming those taxes won't be touched, which taxes will increase? Well, a lot of the smart money is on capital gains tax. So the Chancellor, Sunak, he actually commissioned the Office of Tax Simplification. This is a government quango set up about 10 years ago to look at simplifying areas of the tax code in the UK. He commissioned them to come up with a report on the long-term future of capital gains tax. And basically, in a nutshell, they've come back and come up with some recommendations for changing the capital gains tax rules, which could increase the tax take significantly. Currently, every year, capital gains tax raises about £10 billion, and they reckon that could go up to £14 billion with their proposals. So only about £4 billion, which is not a big dent into the 300 billion that we've spent during coronavirus, but based on the fact that the big three are all locked, it's probably odds on that capital gains tax will be the one that does have the changes. So let's have a look at some of the numbers. So what did the Office of Tax Simplification say? They said, broadly speaking, that capital gains tax rates should be aligned with income tax rates. At the moment, capital gains tax rates are a lot lower than income tax rates. So that's the first thing they said. And then they also said that the government should reduce the annual allowance for capital gains tax. So like the personal allowance for income tax, where everyone has a tax-free slice before they start paying income tax, it's exactly the same on capital gains tax. It's a similar amount. It's actually about £12,300 for this tax year. Any gains below that, you don't pay any capital gains tax. So they are proposing that those things, that increase in the rate and decrease in the annual allowance. So in terms of numbers, capital gains tax affects around about 250,000 households, about 275,000 actually, for the tax year 18-19. So it's fewer than 1% of all taxpayers. So politically, it's a canny move because it's not going to upset too much of the electorate. In terms of the rates, what do you pay if you have a capital gain? Well, at the moment, there are actually several rates. There is the 10% rate if you are a basic rate taxpayer, 20% tax if you're a higher rate taxpayer, although for residential property that is higher. It's 18% if you're a basic rate taxpayer and 28% if you are a higher rate taxpayer. Remember, the government has had it in for buy-to-let landlords for several years. They've even said so in their policy papers, in the Red Book, in the budget statements. They said, we do not like buy-to-let landlords. We think they are distorting the housing market, and we prefer people to own, invest in stocks and shares as opposed to bricks and mortar. That is an actual government policy. Hence, the reasons for targeting landlords on various other taxes, and I've done other videos on those. But that's why we've got these different rates for capital gains tax. Basically, more onerous rates if you have residential property and you're selling that. So the Office of Tax Simplification found, funnily enough, there is a real bunching of claims around about the 12,000 level. So people report these on the tax returns, but there's no tax to pay on capital gains because they've made gains of around about the annual allowance. What happens is when you have that distortion in rates between capital gains tax and income tax, it encourages people to report their various income as a gain, a profit on a gain, so that they are paying a lot less tax. So they are suggesting also that the rates, rather than have these 4 rates, they should only have 2 rates going forward. So if these new capital gains tax measures came in, what would it do for the economy? Well, would it increase the tax take? Would there be an extra 4 or 5 billion? That assumes that behaviors will not change. But when you put up taxes like this, especially when it affects entrepreneurs, behaviors always do change. It's going to encourage people to hold on to assets, and it will interfere with the efficient allocation of capital, as well as possibly reducing capital gains tax revenue. So it may not work to the degree that they think it will. It may not raise this extra 4 or 5 billion. So if they reduce the annual allowance from 12,000 down to about 3 or 4,000, they reckon that would drag another 400,000 people into the capital gains tax net. And of course, for landlords, who have already been hit for the income tax, because like I already said, the government do not like private landlords, from a capital gains tax perspective, they will go from paying 28% as a higher rate taxpayer to 40% or 45% if they earn, if their marginal rate of tax is 45. So this is a big jump when you align capital gains tax rates with income tax rates. So a lot of landlords will think, well, we'll just throw in the towel, we've had enough, we were already getting clobbered on the income tax, let's just offload the properties now before this comes in, because we're going to suffer huge gains if we want to do any churn in our portfolio. So that could seriously hammer the buy-to-let industry, if you will, in a big way. So the other thing that the Office of Tax Simplification suggested was to abolish what's known as the tax-free uplift on death. So when you die and you own assets, there is no capital gains tax when those assets are passed to, whoever, or your beneficiaries, your relatives, or whoever, when you die. No capital gains. It's called a tax-free uplift on death, and it's been around for decades, and that's it's it's a positive thing that there's no capital gains tax on death, because of course there is inheritance tax. So predominantly the reason why there's a tax-free uplift for capital gains tax, because it would be pretty unfair if you got hit for both inheritance tax and capital gains tax when you die. So for a long time there'd be no capital gains tax when you die, but there is inheritance tax. However, inheritance tax is not on all assets. So for example, one of the inheritance tax breaks is called business property relief. So when you die, your business is taxed inheritance tax at 0%, as long as you haven't got too many investment type assets within your business. But broadly speaking, no inheritance tax on your business when you die. So the Office of Tax Simplification have said, well, okay, so actually you're getting no capital gains tax and there's no inheritance tax. We don't think that that's right. We think we should reinstate capital gains tax on death when there is no inheritance tax to be paid. So they're not suggesting that you bring in the double whammy of both CGT and IHT, but bring in CGT only when IHT is not due. So they are the proposals from the Office of Tax Simplification on the overhaul, a big overhaul of the capital gains tax regime, which they think will raise about 5 billion if behavior doesn't change. Well, I think behavior could change. Entrepreneurs always find a way of doing things to mitigate their tax bills. So behaviors could change. You could see a lot of people selling up, offshoring, particularly landlords, and it may not raise what they anticipate. The other big area where we think that the tax raising measures will come in to pay for the COVID bill is on pension tax relief. So at the moment, the tax relief on pension contributions costs the UK about 38 to 40 billion pounds a year. It's a lot of money. So for many years we've been speculating about the abolishment of this way before COVID. It hasn't come in. We in the industry we always try and second guess what happens every budget, and for a while now, a lot of people have thought pensions will go the same way as ISAs insofar as no tax relief on the way in, but tax relief on the way out. So it's still going to cost a lot of money, but it just kicks it down the road to future generations when they draw their pension, and that's when they get the tax relief. Exactly, how an ISA works. So, in addition to overhaul of capital gains tax, pension tax relief possibly to be abolished, possibly to be amended as well in 2021. Watch this space. But they are the main two areas that a lot of commentators are speculating on that will come in 2021 to help pay for the growing public debt that is amassed in 2020 to pay for the coronavirus pandemic. So we will wait and see. There is a spending review by the Chancellor the last week in November 2020. Not expecting any announcements on tax rises then. I suspect any tax rises will be announced in a spring budget, probably March 2021. But there's also a lot of call from a lot of stakeholders calling for the Chancellor to not raise taxes for some time. We're still in the midst of this global pandemic. Yes, there's vaccines on the horizon, but this thing's been going on 9 months. It's not going to go away anytime soon. So a lot of people are calling for him to not raise any taxes until maybe 2022. So we shall see. But if you like this video, please do subscribe up here, and I will see you soon.